Hey guys, it is WendyO here. Today I'm going to be doing a short tutorial on what a trading journal is and how it works and why it's important. Before I get started, I'm not a financial advisor, I'm not your mom. This video is not to be taken to enter, exit any type of trade. This is just my opinion on how I do my trading journals. I know other people will tell you to do them differently or maybe use some of my methods and not all of them, but this is how I do it. So I have two separate journals. I have one for margin trading and one for alts. Why do I do this? When I'm margin trading, I generally try to stay away from being in too many alt positions just because it can get a little bit confusing. And margin trading, I don't always recommend it unless you know exactly what you're doing. It can be tough. So I keep two separate trading journals for those. And I don't like to mesh them or get them confused. You can use the same one. Also, too, you can use Excel. There's other platforms that you can use. But I actually use notebooks, and I write them down manually. The reason why I do this, I've been in school for like 9 million years, and for some reason with me, when I actually manually, physically write something down, it registers with my head a little bit better. So before I enter into a position, what I do is I chart the coin, I do support and resistances, I check my indicators, I find things that line up. So I write all these things down and see if it's a possible, trade, something I want to get into. And then I kind of analyze, okay, do I need stops? What are my targets? I write all those things down as well. And then another really important thing is I analyze multiple time frames. The reason why I analyze multiple time frames is because sometimes that brings a wider variety of options and ideas when you're trading. So I also write those time frames down too, along with my indicators. Also, I read on Coinigy, they have a really awesome educational site, or part of their site. And one of their tutorial videos, there was a trader, I cannot remember his name, but he said if you're going to enter into position, you need at least 3 things that line up, whether it be support and resistance, volume, price action, trends, whatever it is. And then I write those down. And if my indicators and all my methods that are bullish to me as to where I want to enter, or long or short, everything matches up, then I will go ahead and I'll enter. After I've written everything down, I have my stops there. I have my entry. I have the size of my position. I have when I'm going to take profit. I have moon bags. I literally have everything there. It's important. Why do we do this? Well, when I first started trading in 2017, I got super wrecked. I can actually go back to my trading journals and analyze what I did wrong. Another thing is if you're trading really well, you can also use possible setups or ideas might come back if you go ahead and go back and you check your trading journal that maybe you didn't notice when you were analyzing a coin or token. I've said this before, but all coins and tokens, especially Bitcoin, they all have their own different market cycles and the way they react with price and different things happening in the news. This might be really good because let's say, for example, there's a coin that you really liked and you were swing trading it or whatever it was like months ago, and then you decided to get back into it again. You can kind of go back in your trading journal and analyze if that was, what its particular pattern was. So what else do I have? Oh, another thing too, Coinigy has a really amazing setting. TradingView has it too, and Blockfolio has it. They'll actually send you, Coinigy has it to where they'll send you an email. So when I'm out and about doing things at school, being a mom, whatnot, I can go ahead and go back and get an alert if my order hit or my stop hit, or if I was able to take profits, or my sells and buys and all kinds of stuff. So Coinigy has that feature where it alerts you can plug your API keys in here and do all kinds of stuff. Blockfolio has that feature. It's on your mobile device. And then I want to say TradingView has it, but I prefer Coinigy. So I hope that answered any of your questions regarding a trading journal and why it's important. Again, quick recap. Pull a project up that you're interested in getting into, chart it. If things look good, you analyze your exits, your entry, your stops, whether you want to move your stop up, if a target hits, whether if you get stopped out, you write all of those things down. You look for confluence. You talk about, if you're into volume, you write your volume down. If you're into indicators, you write your indicators down. Generally, it's good to have about 3 indicators or 3 procedures that you do that all line up. And if you have all these things that are lined up, you can always go back and check to see previous past performance. Essentially, trading journals keep you accountable, and it's good for risk management because you just don't jump into something. You actually physically need to write it or type it in somewhere and see if it makes sense. So it kind of makes your mind think. Being a trader, we get caught up in the emotions and the FUD and the excitement and all these crazy things that happen. But with a trading journal, you can collectively write everything down. You can be calm. Maybe you're looking at the hour chart and something looks really good and then you take a step out because you want to clear your head, you can come back and look at what you wrote down. So it's good. It keeps record. It keeps you accountable. It keeps you honest, and it keeps you from getting wrecked. So anyways, you guys, thank you for watching. I hope you enjoyed this. If so, hit that like button, subscribe to my channel. If you want to tip me, that's great too. But thank you so much for watching, and have a great rest of your day.